Gold on multiple time frames will be this video. It is the first day of June 2019. Welcome to the Money Charts channel. My name is Derek. All bets, trades of the like. Well, that is within each his own risk and their own reward. We'll take a look at gold from the 15-minute all the way to the monthly. Then we'll take a look at gold and the Canadian dollar cross as well, since I'm Canadian and there are other Canadians watching this video as well. So amongst the 15-minute time frame, this has just been nothing more than going up higher highs, higher lows. As is the case in the 1 hour, we can see where this bottom is from this point, and it's just going up and up and up and up and up. That's really not much more to say. Let's take a look at 4 hour for more data. We can see we've came up to this previous level of resistance in here, and it's gotten above it. That's fantastic. So after this nice little water slide ride lower within the 18, where price action stayed and held below the 18 average of lows, it managed to flatten out the band in here and then get above it. Okay, let's hold where we need to, and we can see this is where the support comes in, twice hit at 12 and 3/4, which happens to be in here. So even though it goes below the 18, so be it. When you have a decent sized move from point low to point high, it needs to have that move. And even here, point high, point low. Decent move gets above, gets below. And within the retracement mode, after this goes up, how important it is for a higher low and a bullish level, it did resist where it was, or supported where it resisted. So on a bearish level, the resistance is right in here, this little level here. If this is going to be a bear market, or a bear market rally within this time frame, then maybe we can come up to as high as 1230. And originally this is all it was, and we can see it corrected it amazingly during the time frame in here, and it was just off to the races amongst the daily term time frame. And let's get rid of that annoying ad where invest into 20% per month blockchain fund. I like to hold as much of my fiat, that too as well. I like to hold as much of my fiat, my gold, my cryptos in my possession. All my gold, all my silver's in my possession. A lot of my fiat currency and a lot of my cryptocurrency are in my possession as well. But amongst this gold, we can see all the lower highs it's been having since the February top as price action was above the line. Well, what's the line? Well, we'll see later. You won't even really understand it until we get to the monthly. So the weekly will help you understand a bit, maybe, probably not. If you've seen the videos, you already know. If you've seen them before, you might forget, you'll remember. But as far as how I'm looking at this, lower high, lower high, lower high, lower high, higher high, and higher high. Okay, so now a second higher highs in mix amongst the lows. This low has a matching one, a lower one. This one was a matching one. This is an interesting one because I could make a case for two things. One, it's a matching one to this and a major pierce above, or it's a higher low and it is as low as it possibly can be to be a higher low. For if it was even just a little bit lower, we're now in the matching low scenario. Either way, the market held and stayed above that level. Either way, it got above this level of resistance after a successful correctionary move. Because getting into this 18 average on May the 23rd and then leaving it just recently, spending time supporting this successfully, supporting this little area in here, that's magnificent. Now, this 1285 to 1288 area from this time frame is where I want to see it must hold. It can, of course, go higher than that. It's pierced above this high. Whatever it does now, maybe it can go sideways, but it's almost, I don't know, live question mark. It could go either way. I wouldn't be surprised if it has a fast move up to the 1321 mark. Since it has broken this level, it has made a nice little statement upon such after a successful correction amongst the low side of things. It's doing effectiveness amongst the high area of price. So I mean, it's good to say that in bearish conditions recently, that yeah, I mean it's up and it still could go up a little bit more. And let's take a look at more so on the weekly term time frame. So we've had this big high up there just fall like a blah 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 blah. Insert whatever is it ver adjectives whatever term it is to express something. And then from the low to this high, and that's a very good move after this move to make, again, same thing, either major, pierce below, or is about as high as this can be for a lower high move. But within that, it filled some of the space and not much. And all this time in here from April 15th to break down from this 18 average, and no, not doing it. And then in this session here on the date of May the 13th, it gets above it, comes back down, and now it's at this high again. That's like a magnificent setup, and the whole point is the way I look at it. Now to the highs. Again, like I said, I want to see it hold this little area here where it resisted if it's going to pull back. And then getting up to this, it could easily pierce extra too, because having price action get into the 1300s, higher than that actually, but just going up another 3/4% or such has this statement of a breakout attempt amongst the 18. And if this is all it corrected, this would be resumption of this bull market trend. And we were looking at targets. Well, the early one on the breakout has most certainly got to be this range of resistance between 1345 and 61, which it is, because this level here works out the exact same thing as the statement of I want to break out. That's a clear break above the 18 highs. On the monthly chart, this level, these lines, and there's two of them, there's one at 15 1/4 as well. They represent that of Fibonacci retracement, the real, true, amazing, no, the correctly calculated retracement. It's not high minus low, multiply Fibonacci percentage plus low. And if you like, well, what do you mean by that calculation? Well, you know that program you use that calculates it for you. There's a well over 90% chance that's how they do it. And if you thought that's how you, and if that's how you calculate it yourself, learn, well, not learn. Look back at your exponential math if you already know it, and if you don't, yes, learn the exponential mathematics, and then you'll see, yes, high divided by low, which is the rate of movement to the or the length, how large the move it was, to the exponent of 0.382, which is what this one would equate to, an exponent of 0.618. Multiply the low again. And amongst it, when you're hitting this level of resistance, hitting it once, successful pullback, hitting it again, successful pullback, hitting it again, larger pullback, because higher low, higher low, higher low, lower low. But the lower low is a higher one to here as well. And showing failed breakdown, because a failed breakdown, you can make or you can draw a little U-shaped formation because it broke a key level of support there, had little time in there, and then it did not resist the neckline. It got above the neckline and then stays in the congestion area where it previously had for a significant period of time. We're on period number 5. Of course, this month has now completed. We'll be entering period number 6, so the month of gold completed with a gain of 1.7%. And to have a noticeable green period, a color on 1.7%, really shows you how low this volatility is compared to cryptos. However, this is something you can hold in your possession, and there's no guarantees cryptos are going to work. I like a diversified portfolio of paper rectangles, what can be turned into paper rectangles in electronic form. Gold in your own possession, silver in your own possession, and cryptocurrencies with the majority of it in your own possession, realizing having some on exchanges is most certainly a good play when you're trying to trade them and increase them for more, and then of course turn them into gold and silver. Okay, so all of this resistance test, you can make a case for an inverted head and shoulders pattern. This is like the left shoulder from like 2013 all the way up to, well, heck, either January here or here. There's your left shoulder. Your head is the 2015, 2016 lows. And then the right shoulder would start in 2016 here. And the right shoulder is just not even fit. It's still going on into play. It's a 3-year right shoulder. And then on the break of the neckline, which is at about 1365, expect a significantly large leg higher, which would be above this level in here. This coincides, they usually always do, within key areas. This key area being the 3x hit support of 1521 back in here. And yeah, getting above this, I wouldn't be surprised high 15s even would make more sense. And if there's not resistance there, this thing's next target level would be the 1900 point target. And if that's not resistance, OMG, is that going to get large? Now, the last time I seen a market that I compared to this, and I'm going to go back to this again, was Bitcoin. And it wasn't on its monthly, it was on its more shorter term. And this was when it had this little move in here. And again, left shoulder, head, right shoulder type of stuff, but it had all of these breaks of this resistance. And then, if it got above this, I would expect a fast move to its next level. Oh, okay, that's that fast move. And it wasn't resistance there. As the market would move on, and then it came up to its next level, which it didn't resist again, which means move to its next level. Well, it hasn't gotten there yet. That's where we stand today. Back to gold. And bring it to its monthly. There we have it. There's the move. All of these levels. It wouldn't be a surprise if it come up here, if it either resists it and then just hangs in there for a while. But to me, it's either we're going to probably come back to here and resistance will become support, or it'll just keep going. And in a situation of breaking out past this 18 average of highs, this is just really, I'm not going to say it's a lame move, but it's really just a first move. And it's a move where only minimal correctional could come into play. And then, of course, that could be just like, wow, there after that. So this is what we got on TradingView for the gold data. When it had its move from it last time it left the 18 in here, it went. Because it was not in an uptrend back in here, just like it's not in an uptrend now. So when it resumes, reverses trends, things can get pretty wild. And its attempt getting out of this is, well, whichever way you want to look at it, it's either reversal or resumption. I mean, it barely went down. Let's take a look at gold against the CAD. And this is its monthly term time frame. This is one of the sweetest pre-set up markets that I've seen. When we consider, and I'm just going to go like this because it would be easier to see. And of course, another annoying advertisement. But this uptrend as it's been doing, but hit it here, come back. Resist this area of support, and then support this area of resistance. Interesting situation. Something's got to give. Okay, we get by here and we go back to previous high congestion. We support this little area that it comes from. We do that even again, and even just this little box in here. Oh, this thing looks so live. So when we look at this and go back to the auto, take a look at less periods. Just how it holds and stays above this green candle breaking higher. This month is over again, and this thing looks very live. The weekly chart, how we've had all of this support in here, how it's actually stayed and held since all year long at this area. It didn't spend too much time before at in here. It spent an okay amount of time in here, but better here. And really, it's even more productive than it was back there. So the setup of this on the gold chart is fantastic. And while we're at it, let's just take a look at gold and other currencies on the monthly term time frame. So what I'll do is I'll just type in XAU and see which that's cryptocurrency. That's XAUR. I got so excited thinking that gold was available on Bitcoin and Ethereum when I first seen this. And yeah, I looked at it. I didn't even see the hit BTC. Okay, that would have been so exciting to see. Okay, against the euro. It's got in between the U.S. and the Canadian one. We can see nice little setup in here. It's got this level of resistance, pretty close to this high in here against the Australia debt note, and they're all debt notes. A lot of I mean, this is very bullish in here, as we can see it in there. A lot of the same thing against the Japanese yen. I mean, that's not a good enough chart. Is there a better one? I mean, that can't be the only one, is it? Usually the better, higher volume ones are the one up top. Is this even worse? No, it's sort of better, but not really. But yes, really. I mean, this level here of resistance, it's at that same area, making all of the higher lows as well. How about China? How about British pound? British pound, nice little breakout set up in here as well. And we got the Swiss franc, the Turkish lira. Some of these are just so bad, some of these currencies, that they're just going to be, oh, what the hell? I'm not even going to go on to any more on that. That they're just going to be in such huge offshore Chinese renminbi. I'm pronouncing that wrong. Okay, not as much data, but nice setup here on that one as well. That's gold silver ratio. Of course, it's going up as well. What else? Hong Kong dollar. You can't see it, but all right, that will be it. Well, yeah, that'll be it. I've done enough as far as other currencies, and I'd like to thank you for tuning in to this video, and have yourself a great day. And again, if you don't own it, you don't hold it, you don't own it, and I could hold all my gold in less than 2 or 3 minutes, probably 4 minutes for sure. I know where it is, I know how to get it, and I know how to put it in my hand. Now, if I were to have any bank goldish stuff on whatever banking system, then I wouldn't be holding it then, would I? And I wouldn't be the one controlling it. It's almost like, and sometimes you want to do this because you trust others, and the people you do, you might trust more. I understand that. But you got something, hey, hold this for me. I need you to store it. Hold it for me. And this person might be miles away, and then you need it. Well, maybe you'll get it, maybe you won't. Maybe something will happen to that individual. He'll lose it. He'll turn on you, or she, or whatever. And of course, you might not expect it. I definitely don't believe it. But those things could happen. So you can expect that this one bank portfolio or this one exchange on the internet is going to hold your funds and do all that for you. And they might do it for every single moment until the last. And then that's all it requires is just that one time. And that's why I like the fact that again I can hold it. But the biggest reasons why I like gold is because other people love gold, and because I am very much very anti against a fiat debt note monetary model. So that's I like gold for those two main reasons. Have yourself a great day. Bye bye.